Welcome to our new video series where we profile a fund manager each week. Today we're catching up with iShares, a division of BlackRock that seems to be riding high on the booming exchange-traded fund industry, which is set to quadruple to $100 billion. Here's head of iShares, Jon Howie, with more.
The focus for the past 12 months has really been continuing to build the ETF franchise in Australia to meet what we think is a rapid development or the evolution of the ETF. We're really starting to see advisors and investors incorporate exchange-traded funds, and iShares particularly, at the centre of their portfolio because of the low cost and the liquid nature of the instrument.
Jon Howie says the Australian ETF industry currently accounts for 1% of the retirement pool, and that's set to grow to 5%, which will make Australia on par with the US and Europe. He says over the next 6 months we'll see a strong shift in the market, with even more investors using ETFs and more product issuers issuing global ETFs.
We're going to see clients looking, I think, to replace some active managers with exchange-traded funds, in some cases to bring down the cost, but also to improve performance in some cases.
He says with the low global rate environment to continue, investors will increasingly look at non-traditional investments for income.
We know that Aussie investors have generally looked to Aussie equities to generate income from franking credits from dividends. Now what we're seeing is that investors are looking to more global assets like global fixed income, global bonds, which in some cases are still paying relatively attractive yields. What that means for advisors is potentially educating clients on the benefits of fixed income in a portfolio, for example, or ways to generate income that are accessing the global set of opportunities rather than just, say, term deposits or Aussie equities, which is maybe how they were accessing income in the past.
Jon says with the increasing pressure on advisors to deliver better services, fund managers were under more pressure to offer better products, and ETFs could be a big part of that solution.
What we see is that actually clients are combining ETFs with other ways to invest, so with actively managed funds or with direct securities to actually create for them what is the optimal portfolio. So clients can go and buy global bonds, global equities, potentially other types of exposures, all through the ASX, through their brokerage account using Aussie dollars, not having to go and look offshore for those securities or potentially buy some more expensive or more difficult to access securities.
He says another key trend was that advisors were better educated about portfolio construction and investment fundamentals. However, more advisors were choosing to outsource that part of their business.
And by outsourcing some components of the planning practice, planners potentially are able to offer their services to more clients.